Welcome to the Free Cities Podcast. My name is Timothy Allen, and this is the official podcast of the Free Cities Foundation. Hello and greetings from here in Croatia, and welcome to this episode number 81 of the Free Cities Podcast. Yes, that's right. I'm here in Croatia with a colleague from the Free Cities Foundation, and we are just a matter of hours away from possibly stepping foot on Liberland for the first time. More of that to come, of course. I will be searching out Liberlanders in the vicinity who are happy to speak on this podcast. But in the meantime, I've got another fresh episode for you. So fresh, in fact, it still feels warm. I was in London yesterday and I met with a gentleman by the name of Glenn Cameron. Now, Glenn is a senior investment consultant who was recently appointed as head of digital assets at Cartwright, which is the independent privately owned pension, actuarial, consultancy and administration firm. Now, if you're a financial layman like myself, long and short of it, he's the guy who deals with institutional investors with regards to Bitcoin. Now, Bitcoin and institutional investors is something that's been quite dramatically cast into the spotlight recently with the SEC's decision to allow the approval of spot Bitcoin ETF products to US citizens. That's exchange-traded funds. Now, most people acknowledge that these developments are ushering in a new era of institutional adoption of Bitcoin. Some saying that it also grants a new level of legitimacy to the decentralized money. So I was extremely happy to sit down with Glenn and get his experienced opinion on what's going on and what this means for the world of finance and individuals who want to be self-sovereign with their money. Now, this was a great conversation, full of excellent insights from the world of legacy finance, and will probably be of great value to anyone who wants to understand Bitcoin's path forwards towards mass adoption. So many thanks to Glenn for giving me some of his precious time, and FYI, don't be surprised when you hear somebody vigorously knocking on his door during the episode. Glenn's dog escaped from the house while we were speaking, and it was his neighbour returning it. And unfortunately, I couldn't edit it out of the conversation since it was flowing so well at the time. So it's still in there. Don't forget, questions and comments can be sent to myself, podcast@free-cities.org. That's my own personal inbox, so I will see and read everything that comes. We'll try and get back to you as soon as I can. The link to the Free Cities Telegram channel will be in the show notes. And don't forget, Liberty in Our Lifetime 2024 tickets are, of course, now on sale. Hurry and get yours before they all go. Finally, then, whilst you're pining over the amazing list of speakers that we have lined up for the conference, why don't you take a short break and take a moment to sit back, relax, and enjoy my conversation with Glenn Cameron. Let me tell you what I think I know about you. And actually, here's another question as well. Are you a former gold bug by any chance?
No.
The only reason I ask is because I've never really. I speak to a lot of Bitcoiners on this podcast because there's a very strong sort of like thread running between both the worlds of Free Cities and Bitcoiners. But I'm desperate to speak to a gold bug or a reformed gold bug because I feel like I never put the case for gold across in a way that isn't well, gold's old-fashioned. It did well for 5,000 years, and now it's time to sort of move on.
Sam would be the right person because he was a gold bug. Back in 2008, the world stopped making sense to him, and he kind of went on he was doing a lot of reading, trying to figure things out, and he came across Austrian economics, and then he became a gold bug. And then that's kind of when he started looking at cryptocurrencies, he shitcoined around and bought NFTs and all this kind of stuff. And then he landed on Bitcoin, and Bitcoin kind of made sense to him because it was gold in a better, different form.
How did you go into Bitcoin then?
So the way it happened was I was working at a investment management firm, and I was managing institutional portfolios mainly for DC pension schemes. And there was a different part of the business, which was a private wealth division. They were managing like high net worth individual wealth. And they had a big competitor. And clients were coming to them and saying, we want access to Bitcoin. Right? And big clients, like the size of a pension scheme, but it's an individual, right? And they were like, had their, very traditional view about it all, and were like, that's not something we do, that's something you have to do separately. And the clients were saying to them, well, your biggest competitor's doing it. We might just go over there. And we had like a WhatsApp group. All the investment team, like sharing graphs and whatever was going on, ideas and things. And the head of that private wealth division asked for a volunteer. Say, listen, this is what's happening. I need somebody to work it all out for us, figure it all out and whatever. And I was like, okay, that's me. I'll do that.
Why though? Did you have a previous interest in it?
I had a number of conversations over the years and it was more about making money. For me at that point, it was like a friend of mine put me onto Bitcoin, and the fact that it was when there were no exchanges, and was like, hey, we should look at setting up a exchange. I was in South Africa at that point, and I read a number of books and whatever. I couldn't make head or tail of it. At that time, there weren't like easy things to read and eventually I just sort of quietly gave up. But then he had spoken to me about it a number of times. And like, I remember him like saying to me, this is what you do. And you put the best wallet, in his opinion, was Trezor. And I was like, what is this thing? What is Trezor? It just didn't make any sense to me, any of it. I was like, what the hell's going on here? But then, and I think that's what kind of sparked the curiosity in me, that when he asked that question, I was like, okay, now's my chance, because I'm going to be able to kind of use the company as a way to speak to experts and get them to tell me what I don't understand. And so that's what I did. I basically spent like a couple of years meeting with crypto fund managers, reading, like getting snippets here, and then kind of doing research to figure out what I didn't understand and whatever. And, then started going, okay, let me try and do this myself, So bought some Bitcoin, and then was like, oh, this Ethereum thing sounds interesting. Let me buy some of that. Oh, there's this other exciting thing, Polkadot. Let's buy some of that. And then there's Avalanche and all of this crazy stuff. And then only one of the reasons he's my favorite person I've never met is I read the Bitcoin Standard. And then it all clicked for me, right? And literally in that week, I sold all the other crap, bought Bitcoin, and then I went on to kind of set everything up for them in this company. Worked with the manager research team to do all the due diligence, put the fund on the buy list, arrange like a road show around the country so that the private wealth division could go with the fund manager and talk to clients about what they were doing and what was, what the unique parts of it were.
Can I just ask a quick question? When you're, I'm not massively financial word literate.
That's okay.
Let's say. But what I understand now since the ETFs have come out is that a lot of individuals and corporations and hedge funds and whoever couldn't buy Bitcoin because they couldn't have access to something like an ETF. So if you're how are you selling Bitcoin to people in this sense? Are you just doing it, you set up a cold storage for it and you just say, look, we'll look after it, or you give it to Coinbase to look after, or whatever? What's the difference between that and people that have to use an ETF?
So I think it's actually a misconception that it's not possible without an ETF. So for example, here in the UK, a pension scheme can buy vintage cars, wine, whiskey, fine art, right? There is a part of the Pension Act which basically says that a pension scheme should invest predominantly on regulated financial markets, right? But there's a guidance note from the pension regulator which kind of defines what the word predominantly means. And that means anything 85% or greater. In other words, 15% of the portfolio can be invested in anything that's not on an actual regulated market. So it could be a building, it could be anything. And so Bitcoin falls into that category. And then it's all about custody, right? And the same things apply. So first of all, pension trustees are not going to want to custody Bitcoin, right? But the issue then becomes, okay, well, what is the most robust way to custody this for an institution, right? Now, in my perspective, the ETFs, if you look at the majority of them, are the custodian is Coinbase, right? And if you look at Coinbase's credit rating, right, it's a junk bond, right? And if you read the ETF filings, like if you go and, only nerds do this, right? But if you look up BlackRock Bitcoin ETF filing and you go on the SEC exchange, it's all there. And you just go Control F and search for the word bankruptcy, right? And the first few are about FTX and various scandals and things like that. But then you come to this point where BlackRock say in their ETF filing that if the custodian goes bankrupt, right, the law is unclear and holders of the ETF are at risk of losing all their Bitcoin, right? So if you translate that into plain English, what it means is really who's holding your Bitcoin is Coinbase, right? And as any good Bitcoiner knows, a very bad place to hold your Bitcoin is on Coinbase, right? So you've got the big brand name BlackRock and everybody's like, oh, it's BlackRock, nothing can ever go. And probably for reputational reasons, they would stand behind it, right? But nevertheless, they could, for whatever reason, say, listen, we warned you. It's in the ETF filing. If you didn't read it, you haven't done your due diligence properly. It's not our problem, right? Another thing about the BlackRock ETF, or all the ETFs, is they say that the manager has absolute discretion in the case of a hard fork, which fork to follow, right? They've also got various gating provisions and whatever, not to mention the fact that in-kind redemptions are not possible, and you can't send units in an ETF listed on the New York Stock Exchange to Tokyo, right? So what we've done is we've set up multi-institutional custody, where we have a 2 of 3 multi-sig, and there are 3 non-related institutions, including 1 qualified custodian, who each hold 1 of 3 keys. And we have to sign into a software policy layer with a thing called the UB key to authorize any transactions. And that is part of the private key, so that no transactions can even be initiated without us first authorizing, and then two separate institutions signing the key. So it's multi-sig for institutions.
That's interesting, though, because what you've basically done is the job of the ETF in a way.
Yeah.
And it would suggest, though, that more over time, more and more larger institutions, or say if you're a pension fund or something, you would do that yourself, would you not, rather than hold the ETF? Would you not choose to well, no, maybe not. Maybe not. People don't care like Bitcoiners care, do they?
I would hope so. You know, what you said, I would hope that people would kind of get to that point, right? But in my experience, and I'm generalizing here because there are going to be exceptions, people want somebody else to do it for them. Particularly in the institutional space, they want kind of separation of responsibilities and powers. They want it to be somebody else's fault if something goes wrong.
I know, but there's a big difference between having a multi-sig and having an ETF. Multi-sig makes sense to me, and I think actually as your Bitcoin wealth increases in value, I think that's a very good idea.
Yeah.
It's great if you do it yourself, but I don't see any problem with handing it over to an institution to sort it out for you as well.
Yeah.
But holding an ETF is not holding any control over your Bitcoin, like you say, and especially if it's if it's at Coinbase even. Maybe if they had their own multi-sig and some, then, you know, all you're relying on is, like you say, their public facing kind of reputation.
Yeah.
If they screw up big. But, I mean, it's BlackRock. I mean, can you really screw up at BlackRock? You own half the world, pretty much.
You just make it whole. You somehow, you know. But, I mean, if you look at BlackRock, so BlackRock, people think that, oh, it's the biggest asset manager in the world. It's got 10 trillion worth of assets. Nothing can ever go wrong, right? But people forget that 10 trillion doesn't belong to BlackRock. Right? And if you look at BlackRock's balance sheet and income statement, right, and then you consider that they've got 215,000 Bitcoin in an ETF, if something goes wrong, right, that, especially if Bitcoin 100x's, right, that could be a problem for BlackRock. They may need to walk away.
Sorry, I don't understand. Why would having 200,000 Bitcoin 10xing be a problem?
Because let's say, so at the moment, what's 200,000 Bitcoin worth? About 14 billion?
Something like 70,000, yeah.
Yeah.
Right, yeah.
So if it's 100x's, okay, it's 1.4 trillion. Yeah. BlackRock, if something goes wrong, right, and, you know, Coinbase goes bankrupt, in the bankruptcy proceedings, that Bitcoin ends up as part of the bankruptcy estate. Unit holders in the ETF end up as generalized unsecured creditors in the bankruptcy proceedings, and they all have to take like a 20% haircut because they're more senior creditors that have to be paid out first. So now it's $250 billion that the haircut across all holders is worth. Even though they've got 10 trillion in assets, that belongs to pension schemes, charities, foundations, endowments. It's not their money. They don't have 250 billion sitting around to make everyone whole.
So what would they do in that case? Just,
they would say, well,
I mean,
in the risk disclosures in the ETF, we made you aware that this was a risk. The risk manifested, and investing's a risky business. You've lost 20% of your Bitcoin.
What I mean is, what would they do to mitigate that? You said they'd be in trouble if suddenly they've got 1.2 trillion worth of Bitcoin. Yeah. Would they not let it get to that? Would they rebalance their portfolio or whatever? I don't know how it works.
Oh, the actual underlying holders. Yeah, most probably. I mean, so for example, so we've got a couple of pension schemes now about to make an allocation to Bitcoin. Right. And so in the investment advice, we've kind of set rebalancing bands. So depending on the time horizon, the risk profile of the clients or whatever, we'll either have tighter rebalancing bands or wider ones. So like, for example, with the one we're suggesting, they start at 2, but they only rebalance when it gets to 10% of the portfolio. And then they only rebalance back to 8. But then each time it hits 10, they rebalance back to 8. So they just keep sort of skimming bits off the top. So, I mean, in my personal life, I'd never do that. If you do the maths on an Excel spreadsheet, historically, that was the worst idea possible, right? But the thing is that, these institutions, they can't have a portfolio that's like kind of dominated by Bitcoin, and they kind of, from one week they're up 20% and then the next week they're down 30% or whatever. So you've got to kind of keep the volatility of the overall portfolio within certain bounds. So it's just kind of a practical matter. So I suppose you're right. Probably people would be selling the ETF, so whether it would get to those kinds of levels. But, like that's assuming that no one else buys the BlackRock ETF, which seems unlikely, right? So I can imagine, I think, I don't know how many Bitcoin are in the ETFs collectively at the moment, but I think it's close to 1 million now, right? Mm-hmm. And I can imagine that because over the next, say, so for example, with the setup that we've got for our clients, right, it took us about 12 months of hard work to get everything, to do proper operational due diligence, to do legal and tax review, to, look under, and also then negotiate with the custodians and the managers to change things in accordance with our requirements and red flags that have been pointed out to us and stuff like that. A lot of back and forth and negotiation and whatever. It took us 12 months. And if you consider that the ETF's only launched on the 11th of January, right? And most institutions are not as focused as we were on this. I can imagine that a lot of them are only going to be in a position to actually start considering making allocations to ETFs and stuff like that, at least 12 months from the 11th of January, So I think we might end up seeing 3-4 times the amount of Bitcoin in those ETFs, right? I mean, I'm just guessing. I don't know, right? But I can imagine that might be the case.
Do you mean 3 to 4 times the Bitcoin or the money, the dollar value?
I mean the Bitcoin.
So you reckon 4 million Bitcoins will be in ETFs?
I mean, I'm just guessing. I don't know
that's
that.
Quite. I mean,
but
that's a lot. I mean, that's a lot of Bitcoin. That's quite a risk, I would say. Especially if it's all custodied at. I mean, most of them do custody at Coinbase. Yeah.
Yeah, it's so bizarre to me, right? Like, I also don't know if what I'm about to say is 100% true or not. But my understanding that is MicroStrategy also custody their Bitcoin with Coinbase.
I don't know. I would have thought, because they're a software company, you would have thought they would have come up with something themselves.
Been a little bit more elaborate about it, right?
I don't know, though.
Yeah.
I haven't got a clue.
I mean, this is a message that I'm trying to get out there, right? Is that if you're holding equities or listed property or bonds or whatever, it's not possible to do what it is with Bitcoin. You can't have a multi-sig for an equity portfolio, right? And so you've got this groundbreaking, innovative technology that allows for kind of borderless kind of transactions at the speed of light, right? Where you can kind of, it's a pristine collateral because there's no counterparties involved and stuff like that, right? And then you take this thing and you put it in this ETF wrapper and you basically erase all of that stuff. Now, a low credit rated corporation that is a cryptocurrency exchange is your counterparty. You can only convert your Bitcoin for dollars, nothing else. You can't do anything with it or whatever. It doesn't make any sense to me at all why you would want to do that and why you'd be investing in Bitcoin in the first place if you think that's where it belongs.
Well, obviously, it's a financial decision, like you say.
Yeah.
my one thing I wonder, I suppose, as a Bitcoiner, is over the years, will that change? Because like you said yourself, and this is a very common story, a large majority of people become interested in Bitcoin because the price is going up. And you see that now. Right now, there's a load more interest in it again, of course. But a percentage of those people go a little bit deeper, and it completely changes their lives when they start looking into it in a myriad of ways that only nerds know. But it's quite astonishing what does happen.
Yeah.
The question is, does everyone get it in the end? Does everyone understand it? Because I think it would be easy to look back in hindsight at the system we currently have now and go, that was ridiculous.
Yeah.
Completely insane, totally unfair, a massive scam. Someone can just create units out of thin air of your currency. I mean, who in their right mind would want to live under that system? It's just, we all grew up in it, and we all just accepted that you've got to run as fast as you can, try and beat the guy next to you. Because if you don't, the central bank's going to beat you. Both, So maybe in hindsight, we do look back at this and everyone goes, wow, that was a really weird few years.
Yeah.
Since whatever, the fiat years or whatever.
I mean, so because of the role I'm playing in, so just to give you a little bit of background. So when I took the job at Cartwright, I was interviewing as an investment consultant, but Sam, my boss, asked me about what I think about cryptocurrency during the interview. And I said to him, I think it's a load of bollocks, but I think Bitcoin's the real deal. And he was like, that's exactly what he thinks. And he said he wants to set a whole lot of Bitcoin related things up here at the company, right? And he'll give me the job if I help him do that, right? So that's kind of my role, is we're doing a number of different things we can chat about if you want with Bitcoin, not just putting it in a portfolio. And so in that role, I end up talking to people internal in the company, external to the company, clients, non-clients, lawyers, insurance people, whatever. And so I've kind of had the experience of how do people think about this thing and whatever. And to your question, will we look back and everybody's like, oh yeah, that was so dumb, right? I don't know what the answer to that question is, because I think if it grows to a certain extent, the people that I'm going to talk about now will kind of be forced to change their mind. But there are a lot of people, particularly in our industry, that they kind of are so indoctrinated in the current system, and it makes so much sense to them that when you talk to them about Bitcoin, they think you're nuts, right? If you talk to them, like if I just talk to a normal person, I explain to them that, when you go and borrow the money to buy your house, what you got taught at school, that the bank's an intermediary between lenders and savers and all, that's all made up, right? They literally create that money out of thin air and just hand it to you to go and buy the house, right? It blows people's minds. But when I tell that to certain people in our industry, they're like, yeah, but that makes perfect sense.
I don't know how it makes perfect sense.
Yeah.
I mean, I've tried to understand the fiat architecture, let's say.
Yeah.
And I've got a pretty keen mind, but I find it very hard. It's layers upon layers of complexity that end up sending you into just nihilism. That's what my interpretation when I've tried my hardest to understand it, other than the fact that, yeah, it's just a bit of a scam, really. It's someone in the middle, someone at the top has got the power to basically issue in monetary units.
Yeah.
And they do it, and they decide where they go, and they try and sort of like socially engineer the world.
Yeah.
And then anyone that's friends of theirs or anyone that's colleagues of theirs, they get more benefits, and the further away you get from them, the less benefits you get. That seems to be the system, right?
Yeah. That is, I mean, the thing is that, so I guess there's that saying that, it's very hard to explain something to somebody whose paycheck relies on not understanding it, right? And so what is the overarching situation here? Well, because of what you just said quite correctly, which is essentially when you strip away all the complexity or whatever, there's this entity that can just create money out of thin air, right? They do it. And in the process, they dilute the value of all the other money in existence. So that then gives rise to the need for an investment management industry, right? And they become experts. You become a chartered financial analyst or an actuary. You get taught to think in a certain way about risk-free rates, real rates, inflation rates, designing complex portfolios to kind of compensate for the system and grow wealth in real terms and all this kind of stuff, right? But in a world of hard money, absolutely hard money, you don't need any of that stuff, right? Everything just, the real purchasing power of your money gradually increases as technology provides productivity gains across society, and that accrues to society, right? But I think also where people, because in the current system, it's basically debt fueled, right? So the classic example is, the economy is slowing. We're going to kind of lower interest rates, make it cheaper and easier for people to borrow, and then also easier and cheaper for the government to borrow. And we're going to kind of stimulate the economy, right? But so the one side is all the spending and the, misallocation of capital and investing and everything that goes on. But the other side is the debt, right? And so if you look at the world's financial markets, about 2/3 of it is debt, right? And even the way, for example, you measure, if you're dealing with a type of investment entity like a pension scheme, right? So what happens is you say, okay, the actuary sits down and says, okay, there are 1,000 people in this pension scheme, okay? And we know the scheme rules. So because defined benefits, so the benefit that people, the amount they get paid is defined. It's 1/64 of their ending salary for life, increasing by this measure of inflation, capped at this rate, right? And then they use mortality tables to figure out when they think people are going to die. And they kind of project out the aggregate amount that the pension's going to have to pay out every year. And then you can create a chart out of it, So in the beginning, hardly anyone's retired. Then you hit the max point where everyone's retired. Then people start dying, and it kind of rolls over like that, right? And now you've got to work out what the value of that liability is in the present, right? So what do you use to do that? The interest rate, right? Who sets the interest rate? 6 guys with gray hair in a room. And if they change the interest rate, well, the value of the liability changes, right? So now all of a sudden I did have enough assets. Now all of a sudden, because they've lowered interest rates and the value of the liability has doubled, I don't have enough assets, right? And so in my view, it's all part of every part of the whole way the system works and how pensions work, how funeral trusts work, how everybody thinks about everything. It's sort of another analogy is a fish spends its whole life in water. But if you go to ask a fish what water is, it has no idea. And I think it's like that. It's like once you in this world, especially if you spend like 7-8 years kind of being indoctrinated into this way of thinking, then if somebody comes and points out to you that it's all a load of poppycock and that it's all necessary because there's this entity just creating currency units out of thin air, and they don't have an incentive to get it, right? Yeah.
So let's talk then about the validity of all this, because if you've been following Bitcoin, well, if you've been following it since the start, it'd be hard not to recognize that this year, in particular, something very substantial has happened that's validated Bitcoin.
Yeah.
And for Bitcoiners, that's not really necessarily an issue. Like, the validation comes through the understanding and the 10,000 hours of research and all this kind of stuff. And when you do that, you realize in the end, as your friend Safedine, or to be friend Safedine would say, people will choose the hardest money in the end.
Yeah.
Once they discover what it is. So if you put the education in there, it is. But I think what a lot of Bitcoiners don't understand, and I would class myself as that, is how significant it is that an ETF has been approved this year and that institutional money is coming in, because most of us don't work in the world of finance.
Yeah.
And so what can you tell me from the world of finance? Is it as significant as I've heard people say, or is it just another stepping stone on the journey of Bitcoin into the future?
I mean, so I think it definitely does make a significant difference. It's not as I've already mentioned, it's not the way I would recommend to clients to do it, and there are other better ways to do it. But the fact that and it's kind of been muddy now that these ETH ETFs have been approved, right? Is because essentially what the position of the US government, as I understand it, right? And I think it's naive to think that what the US government decide doesn't apply pretty much everywhere, right? Is that Bitcoin is not a security, right? It doesn't have some kind of corporate entity or issuer that's kind of doing something for their own beneficial gain or whatever. And the fact that, because you would think, right, that the SEC wouldn't put an unregistered security, in other words, a financial instrument that an entity is sold into the marketplace and that isn't providing the proper related financial disclosures, et cetera, so that investors can make informed decisions. And I think that the significance of the ETF was that if they're putting it inside a regulated wrapper, they're acknowledging that it is a digital commodity, right? But now it's become more complicated, right? Because I think what happened was Trump came out and said he's accepting Bitcoin and that he will protect people's right to self-custody and he's a politician. I don't know if he's telling the truth, right? But he's saying the right things, in my opinion. And then, he raised $200 million, and then the Biden administration, it's clear what happened. They came down from an high and said, right, flip the script, approve because it went from like, there's no way this is happening and we're suing Coinbase to, oh no, we're approving an ETH ETF. But now what does that mean? Because does it mean that ETH is now, or have they wrapped an unregistered security in an ETF? That's interesting if they've done that. So it's sort of like now put these two things side by side. And then what happens when you compare ETH to Solana? Right? What makes the one an a digital commodity and the other a security, right? So, I think there's pros and cons to this because you definitely get the stamp of approval. It's very nice to be able to, when I'm speaking to skeptics in the institutional world, tell them, well, BlackRock seem to think it's crazy. Fidelity don't seem to think it's crazy. Invesco don't seem to think it's crazy, right? Franklin Templeton don't. But then on the other hand, now you've got this complete confusion. It's, I came across an article on LinkedIn from one of our competitors in the investment consulting firm here in the UK. And one of the guys, they had written this article, blockchain, not Bitcoin. And
recently was that?
Yeah.
Blimey. That's an old talking point.
Yeah, like a couple of months back, maybe.
No, but right? I mean, that's a really old talking point.
Yeah.
That one goes back years.
Yeah, the real innovation here is blockchain technology. Bitcoin's just worthless and everybody's confused, right? And Sam knew I was going to take the bait. So he got hold of me on WhatsApp and said, don't say a word. Okay, we don't want to boost this guy. Just keep quiet. But I waited a couple of months quietly, and then I wrote an article, Bitcoin, not blockchain, right? But now all of this stuff, right? Now you're going to have an ETH ETF, right? And then I don't see how they're going to be able to stop a Solana ETF and all of this kind of stuff. So I think it's going to be helpful in certain ways. And also, the conspiracy theorist in me says it's quite useful if you know that the real risk here is an immutable, properly decentralized, hard money, right? It's quite useful if you can create confusion, right?
So, I mean, I've just written down the word, is it nefarious? That standing alongside by side Bitcoin and Ethereum in the same context, yes, it could be a nefarious move by somebody wanting to basically use one to discredit the other in the future, say. But it also could just be people shitcoining. Like you recounted the journey that I suppose it's 95% of people go on when they discover cryptocurrency.
Yeah.
They probably first discover Bitcoin.
Yeah.
Then they kind of just peek behind the curtain and go, oh my God, what's that? And then they shitcoin for a bit. And then hopefully, and not everyone comes back around, but a lot of people do who put in the hours, come back around to Bitcoin. Maybe that's just happening in the institutional world. I don't know. Could that happen? Could that be? I mean, it's a very common experience of individuals. So why wouldn't conglomerations of individuals experience the same thing?
So I agree with what you're saying there. I think from the institutional investor's perspective, what you're saying is accurate. Okay. So they're confused, and it's not a helpful position to put people in that you're trying to explain hard money and Bitcoin to, is to then leave them, now they're confused. There's this other thing, Ethereum and Solana and Polkadot. And also once you start telling them that that's all crap and then you start sounding, like you're a zealot or something, right? But on the other hand, and this is something that a story I already shared on a different podcast, but I mean, your audience is going to be different, so when we were looking for how we were going to give our clients access to Bitcoin, I spoke to 78 different firms, trying to find the right solution. And one of them was the investment bank Nomura. Yes. Big Japanese investment, one of the big 5 investment banks. So they've opened a digital asset subsidiary called Laser Digital. They've got a Bitcoin fund here in London, right? And the institutional salesperson there had been at a previous firm. She knew I was looking for a solution. So when she moved over there, she got hold of me, right? And they were their style, because of the size of the organization and whatever, is, okay, we're going to wine and dine you, you know. And so I got invited to this dinner in a house they own worth like 150 million pounds in Regent's Park. This thing, it looks like the White House, right? And you go in there and they've got like this fancy, very long dining room table and whatever. And they had the chief investment. And I was like kind of the lowliest individual there. The rest of the people were like the chief investment officer from Deutsche Bank and all of this kind of thing. And, you know, I'd already been aware that, okay, these guys, I mean, Laser Digital and Numera aren't in this for Bitcoin. They're in it for blockchain technology and, you know, all these kind of things that these institutions think that, you know, that what this is going to be for them, right? And they had Lord Philip Hammond, who is the chairman of their advisory board, as the guest of honor, right? And the way it worked was we were kind of all at this long table, but we were all on one side and he was on the other.
Just him on his own?
Yeah.
That's weird.
Yeah. So we were having dinner all in a row. And the
who was talking to who then?
So the intention was we ask questions and then he answers.
How many people on the table?
18.
That's really weird.
Yeah.
If you're down the end, that's a terrible position.
Yeah. And I ended up sitting almost directly opposite him, right?
Nice.
And so the chief investment officer, the first question he asked was, he got to answer the first question. He was like, tell us what you think the regulatory environment is going to bring in the next, say, year, right? And his answer was, I'm not going to tell you. You can figure that out yourselves. I'm going to tell you something way more interesting, which is, I'm going to answer a different question. Is why are we going to see what we're going to see over the next 12 months? Not what are we going to see? And he said, and he was the ex-chancellor and defense minister, right, during when David Cameron was prime minister, right? So his kind of circle, right, and he's a lord, and, you know, he gets chauffeured around with, like, you know, secret agents, and he's this kind of guy, right?
Right.
So you can imagine that if he says that he's clued in on something, he probably is, right? And he said that he didn't, you know, go any further than this, but he said the most senior people in the British government have been speaking to the most senior people in the US government, and the US government's position on it, and he used the word cryptocurrency, but I translate that to Bitcoin, have told the British government that they see cryptocurrency as a national security threat, right?
Which it is.
Yeah, of course it is. And so the thing is, so I think we need to be careful here in thinking that, you know, the institutional confusion when there's an ETH ETF and a Solana ETF and whatever. Yes, I agree. But did it come about like that because on the other end of the scale, they didn't know what they were doing, so they just kind of did all these bumbling things that ended us up in this situation? No, because you can go and listen to Gary Gensler's 14-part training course at MIT, and he understands very well what's going on here, right? And he's in that position, you know, not by mistake. And there are enough people that understand what this thing is, what it means, and everything, right? I don't think
that you're sort of hinting that the nefariousness of it all. Then let me ask you this then, because I was quite surprised, first of all, when BlackRock went from rat poison squared to Bitcoin is hope in a very quick time period.
Yeah.
And I thought, when I analysed it, I thought it's about making money because they make money. That's what they do. And that seems like an obvious answer to that. But then if you add that to the fact that until recently, Ethereum was a security.
Yeah.
I mean, everyone knew it's a security. It is a security.
Yeah.
I mean, it's not even really debatable. There's nothing wrong with it being a security, but it is a security, and it's obviously different to Bitcoin.
Yeah.
And now all of a sudden, like you say, they've wrapped an illegal thing in an ETF potentially. That's not very. Doesn't look good for the SEC. No. But if you look behind both of those things and you add most together, it could be a long play. It could be someone saying to someone else, look, we need to stop this thing. How are we going to do it? Well, we can't stop it. Okay, why don't we legitimize it and all the other crap that goes along with it, then have some kind of disaster, which it's very easy to have a disaster with Ethereum or something like FTX, anything where you're not using Bitcoin in its preferred state.
Yeah.
It leads to the risk lies with someone else, and they always fuck it up, for want of a better word. So then you lump them all together, and when it fucks up, which something will, and suddenly people with very large amounts of money in ETFs go, hold on a minute, this is bullshit. They're all bullshit. And then you regulate it to high heaven because you're trying to save people.
So not a huge S&P 500 companies, but I have been in one role in particular on a board of directors, and it's natural to look after one's own interests, right? So it doesn't necessarily need to be anything nefarious, but when you're in a board meeting, you're sitting around and you're inadvertently plotting and scheming, right? Because you're strategizing. You're figuring out, how can we get more, So now think about, we were talking about an entity that can create money out of thin air, right? And a government that very much likes the fact that if they want to do something to win an election or gain some kind of geopolitical advantage or whatever, they've pretty much got indirect access to that money printer, right? And now you find out about this thing. Imagine if you personally had a printer like that one over there, right? But this one printed legitimate £50 notes. And you could print as many as you wanted. Whenever someone say anything, he just goes to the printer. He's like, it costs 200,000. Okay, print me X number of, and you just go out and you just do whatever you want to do. You take your kids on Caribbean holidays and exotic yachts and whatever. And then you find out that there's this thing that's going to make your printer defunct, right? And considering what I was saying about people looking after their own interests and strategizing, or you could use plotting and scheming, right? I think it's more hard to imagine that isn't going on than that it is, right? Knowing human nature, right? And knowing what self-interest is, and particularly when so much is at stake, power, huge amounts of money, I think we are probably naive if we think that they can't get somebody to explain it to them properly. They have no idea what they're doing, or that they do understand it and they don't think it's anything, right? I think it's much more likely, especially given what's going on at the moment with it now, close to all-time highs, in the news, ETFs, countries starting to talk about it or whatever. I think if things don't make sense, right? Like we were saying, then there's usually a reason why they don't make sense, right? And yes, you have to join a couple of dots, and you can't prove what you're saying or whatever. But if by joining a couple of dots, the world makes a lot more sense, right? Then Occam's razor says, the simplest answer to a problem is usually the right one. That's how I think about it. Yeah.
True. But there are other strategies. And I agree. I think I probably underestimate what it feels like to own a money printer. Because my first thought when you mentioned that was, well, I can just buy Bitcoin then with this printed money. I can transition. I would be looking at that scenario and saying, this is inevitable because you can't stop it. And we know you can't stop it. It's decentralized beyond the point of being able to be stopped. So we can try and stop it, and we can delay it. We can halt it in its tracks. We can do all these things. But probably we can't stop it. Highly likely we can't. But we can buy it. We can get the lion's share of it. We've got the access to the money to do that. And we can buy it without even pushing the price up too much, probably, if we do it bit by bit. I don't know. But even if we do push the price up, it also doesn't matter. We can
think about it, right? So, I mean, I completely agree with you. I mean, that's what I would do with a money printer too, right? But if you're the US government, right? And so by doing that, you speed up the end of being able to print money and export all the inflation across the globe.
Yeah, but let me just butt in quickly. But you don't. You live to 84 years old. You don't care.
Yeah.
Not a lot of people think multi-generationally, and there's no way that someone's not going to think, well, I can get a ton of Bitcoin, and that's fine. All right, my ancestors might be annoyed with me because I killed the golden goose, let's say. Well, I had no choice. I had to kill the golden goose, I had to get rid of the money printer. But I don't think people think like that. I think some families do think really long term, but it's a very small number of them.
Yeah.
But the other thing is as well, I think, and this is what's beautiful about one of the reasons why Bitcoin is so unstoppable, is there are individuals all around the world understanding it and buying it. And they are lawyers, doctors, surgeons, bus drivers, from all across society. And in the end, they're not going to shoot themselves in the foot either.
Yeah.
They're not, those people are, that's the decentralized army that understands that this is good for individuals. Yeah. And the centralized force can't control that in the end. It falls on, it dissolves, because it dissolves into its parts again. This kind of like entity that's kind of like the foot that stomps on the individual just breaks apart into individuals, because they're all like self-interested. And we know that about people. The same thing that would want you to own the money printer also makes you not want to give up your Bitcoin.
So I guess I agree with you. I think ultimately Bitcoin wins for all the reasons that you gave there, right? But I don't think, I mean, just an opinion, I mean, based on just my own intuition or feeling or whatever, right? I don't think the US government or the Federal Reserve or the Bank of England have gotten to the point where it's clicked for them. You know what we should do? We should just buy Bitcoin, right? I don't think they're at that point yet, right? They're at the point where they see this thing as a threat, right? They're telling the public that it's bad for the environment, it's used by criminals, it's a Ponzi scheme, it's gambling, it's worthless, and whatever, right? Okay, maybe they believe that stuff, which is then a misunderstanding, but I don't know, it doesn't ring true for me that all we need to do is go and explain it to them properly, and then they're going to get it and they're going to go, okay, let's buy Bitcoin. I don't think that's where we are.
Well, there's no need for the Federal Reserve at that point. I mean, but that is the dying, it would be the action of a dying institution if it was the Federal Reserve, because the Federal Reserve is required to issue the currency, right? Yeah. But when the issuer becomes a protocol, you're literally being put out of a job. So the Federal Reserve buying Bitcoin is also a misnomer, because all they can do is then become an investment bank or whatever, can't they?
Yeah.
They can no longer be the Federal Reserve.
Yeah.
It literally puts them out of business.
So, and you think about like governments and taxes and all the things that we take for granted and we just accept as normal, like I'm sure you've seen those memes on Twitter where they have like, when the Boston Tea Party happened, they were protesting a 2% tax on thing, and they had a whole revolution about it, whatever. And then they've got everybody sitting on their phones, getting taxed 40%, and everybody's kind of lulled into a sense of security. And then like now here comes along this thing which is all about like freedom and autonomy and sovereignty and all of this kind of stuff. I mean, it's just, to me, there's a natural collision course here, where you've just got two different worlds who are going to collide. I think that Bitcoin's going to win almost, I'm convinced of the fact that it's inevitable, right? But I think, as recent experience has kind of, with the samurai guys, with a lot of companies that I actually know the people in pulling out of the US because they were, and I've spoken to them behind the scenes and they've told me they were warned. They're coming for you, right? So, what's that about if it isn't, like a war? If they aren't like, yeah.
If I step back as far as I can and look at what's going on here, for me, in a historic. When we look back, I think in a historical perspective, this will be obviously noticed as the birth of the digital world. And everything that encompassed, which the framework of it, say the internet, started killing the middleman since the 1980s onwards.
Yeah.
And you've seen it. All the middlemen are getting killed by this new place where people connect directly together, the digital realm. And now it's happening with money. And who are the middlemen? The middlemen are the banks, but also there's the people that actually just create this money. They're all basically now going the same way that other middlemen have gone. That doesn't mean there's not a place for them in the digital world, but you have to kind of find what that might be. But you can't carry on your original thing. And I just think all this fighting and resisting and pushing back is the incumbents, just coming up against everyone else. And it's the discovery of the digital realm where you can put people together, you can talk directly, we can speak to people on the other side of the world now across time.
Yeah.
It's bizarre. Who knows when someone's going to listen to this? It might be next week, it might be in 4 years' time, and it'll still be available. This is all this digital realm, and it's destroying everything about the old order and creating a new one. And it doesn't seem that it's pretty obvious to me now. It's taken a while to really comprehend that that's what's going on.
Yeah.
But it is going on. It's not going to stop. It doesn't suddenly go away. And in fact, if anything, we're going further. We may even, I was chatting to someone yesterday on this podcast about the metaverse, for example, and how much time he's an architect, and they're Zaha Hadid, really high-end architect. And I said to him, his kind of role in his company is the metaverse side of architecture. And I said to him at the end of the interview, in the future, do you ever think that you might be making more money in the metaverse than outside? He said, 100%. Because you can scale in the in the digital world. You can build
infinitely.
Exactly. Your market for the kind of buildings they're making is very small in the real world. Yeah. But online, it's 3 billion people, and you can sell 3 billion metaverse houses for $1 each.
Yeah.
And it would be very hard for you to sell 100,000 of them in the real world. So this is what's going on. It's happened to many industries, the media, music industry, everything, and now it's happening to money.
Yeah. I mean, so this is where my mind goes with all of that, okay, is I think about the difference between, say, Nostr and Facebook, right? So it's like Facebook is digital, but it's centralized. When you sign up for a Facebook account, if you read the fine print, basically, if you post a picture of your kids on there, it belongs to Facebook, right? And they get to decide whether you can speak or not speak, and what you can say and what you can't say, and all of that kind of stuff. So it's kind of like there's this middleman in the digital realm, right? And I sort of see the same thing. But I see what's sort of manifesting is they're trying to do similar things in this digital money space, where you've got like so there's a company here, I think they're called BVNK, right, which doing like cross-border payments but for companies, right, using the XRP ledger, right?
Beautiful.
Yeah. And so it's like they want to own the whole thing, and then they embed with the central banks, trying to they're not actually in bed because the central banks don't want to get in bed with them, but they would love to get in bed with the central banks and be kind of the ledger, So I guess this distinction I'm trying to make is the difference between digital and decentralized. Because I think there's a danger of making a confusion there that this digital revolution or whatever, at least not in our minds, but in other people's minds, it can be like, if it's digital, then therefore it's somehow better. No, it's just the same thing in the digital world.
I think actually, yeah, I'm going to change what I just said. Actually, it's not the digital realm that's affecting everything. It's just that the digital realm is a frontier.
Yeah.
And the first people in there were the freedom lovers, of course.
Yeah.
Of course. It's the same. You look at the history of America.
Yeah.
The freedom lovers went in.
Yeah.
And it was for a long time, it was pretty free.
Yeah.
And slowly but surely then people came in with a control mindset. And the same things happened to the internet. It was a frontier. The digital realm was a frontier. Now people are coming in trying to gatekeep it.
Yeah.
And just like the real world, it's a constant battle. I mean, it's a constant struggle.
Well, we've got online safety bills and, the digital act in Europe, or the crazy stuff that's been going on in Australia, where you're not allowed to post a meme of the Prime Minister, otherwise you've committed an offense. So I think that, so there's things like Nostr, there's things like free cities in the real world, right? Which are these ideas behind like autonomy, sovereignty, decentralization, like people coming together voluntarily who share values and beliefs and stuff like that. And yeah, I think that like this whole digital revolution and stuff makes that kind of stuff way easier. But I think that there is, like XRP and BVNK and even the Ethereum Foundation, so what they do have is they got a lot of money and powerful people kind of behind them. JP Morgan has launched this private blockchain called Onyx, right? And
for what purpose? As a ledger for the business? Or?
Yeah. So basically, they'll have various kind of nodes on the network, which will all be financial institutions, right? And they'll kind of all through consensus trade digital tokens of various kinds and whatever, but it'll be a private blockchain. And it's about like improving settlement and transaction costs and reconciliation and, all of these kinds of things. But I think that's the diametric opposite to like a decentralized money, So, and I'm obviously very interested in that side of things, right?
How does that fit into the world of finance, though? Like when you're talking to institutional clients or family offices or whatever, do you ever talk about this kind of stuff?
It's just so foreign to them. It's so new. It's so. You're pretty much. I mean, they've obviously heard about it all. What do they know? What
about the ideas, though? The idea of self-sovereignty, for example. Do they resonate? No,
not at all.
You would have thought, especially if the wealthy people value sovereignty, I think, don't they? Because that part of being wealthy is isolating yourself from the rest of the world, and not having to queue for things and all that kind of stuff.
So the way I always kind of explain my thinking on this topic is, do you know J.C. Myers? He on Twitter, his handles Croesus. He
yes.
wrote this article, Why the Yuppie Elite Don't Get Bitcoin.
Yeah.
Right? And like basically he's got this like 4-quadrant model where on the horizontal axis, it's IQ. And on the vertical axis is IQ. On the horizontal axis, it's trust in the establishment. And the people that he's talking about, the yuppie elite, are the ones with very high IQ and very well educated, probably went to kind of great universities and stuff like that. But that also, why do they trust the establishment? It's because the establishment has treated them very well, right? They've got a beautiful mansion, a sports car. They're a partner at some law firm or some Big Four accounting firm or whatever. And they know that it wouldn't be very clever to be starting to talk about sovereignty and decentralization and, how corrupt the system is and whatever. It's going to basically get them excluded, right? And so when you say, yeah, I imagine there are, and there definitely are, very wealthy individuals out there or whatever. But when you're working in an institutional setting and it's not often that you're talking to one person. You're talking to a board of trustees, and they're all kind of very aware of each other. Often they're professional trustees. They're a trustee on 15 pension schemes. And the interesting thing is that they're not always thinking about what's best for the investment portfolio. They're thinking about what's best for their career. Right? So they're not going to do anything that, they'll skate on the safe side of the street. So it's quite hard to have those conversations. I mean, it's quite interesting. Like I always also to kind of make the point as when I'm talking, so I'll go and do like training on Bitcoin for boards of trustees, right? Starting at the beginning. Right?
Is that something you wrote yourself?
Yeah, with a lot of help from books like the Bitcoin Standard.
Sure, but you've condensed it down to something that you think old fogies understand, or whatever institutional buyers or whatever.
I can pretty much,
Is it to do with how much? Is it things like good store of value over time? Is it any of the stuff that we've just been talking about?
So the way I do it is I kind of do it through narrative. So I basically say, if you want to understand what Bitcoin is, you have to start with understanding that it's money, right? And once you understand that, then you have to start asking, what is money, right? And when you start answering that question, an obvious place to look is history. Right? Like, how did money come about? So what is the history of money? What does the history of money tell us about what money is? you know. And then I take them on the safety journey, which is the most important characteristic of all about money is that it's hard to produce. Because if money is easy to produce, of course, other people are going to produce more of it, and the wealth that you've got stored in that form of money is going to become diluted, and you're going to lose your wealth, right? And I tell them about the beads in West Africa, and what happened there those became known as the slave beads. And then I explained to them that Bitcoin now has a lower supply growth. I talked to them about fiat currencies and their growth rate in their supply. And I kind of confront head on the fact that, when inflation's 13%, despite what the politicians tell you, it may not be Vladimir Putin's fault. It may have something to do with the fact that they printed 600 billion pounds out of thin air, it might be multifactorial, but they never mention that part of the story, right? And then I explained to them in a nutshell, I explained to them the growth rate and the supply of Bitcoin as of, I used to say it'll be the slowest growing currency in the world as of April this year. Now, obviously, I can just go straight and say it already is that. And I explained to them that the growth rate is going to be supplying until no more Bitcoins will ever be produced. And this will be the first time in human history that something used as money will have a zero growth rate in supply. And that's the end of my first spiel. Then my second spiel is, okay, so what does this look like in your portfolio? Okay, and I show them what it would look like historically, and then I explain to them why I think the way it has affected a portfolio in the past will be the same in the future, right? And I kind of show them that essentially you can create a portfolio with 2% Bitcoin in, that basically the change in the volatility of those portfolio is imperceptible, right? Even in mathematical terms, it's like, 0.15% increase, but it increases the expected return of your portfolio by 1%, right? Which, to do that using equities, right, given that equities, and I'm talking about 1% real, right? So to do that with equities, I would need to put in about 25% of the portfolio. So I can achieve with 2% of a portfolio what I can achieve with 25% of a portfolio with an uncorrelated return stream. So that actually reduces the risk of the overall portfolio, right?
Do you get a lot of pushback when you're giving the part one of that talk? Do you get a lot of pushback on deflation? Because you're towards the end there, you're basically alluding to the fact that Bitcoin has no inflation. In the end, it has no inflation at all. And I know a lot of people get stuck on that.
Yeah.
It's a real bugbear for a lot of people because we've been rather indoctrinated that inflation is an important part of a healthy economy, I think.
Yeah. I don't often, but I do sometimes, right? And I mean, the way I handle it is I explain I usually use the archetypical example of like flat screen TVs that came out and they used to cost like $5,000, and now you can get a top of the range one for 400 quid. And that kind of makes sense, right? I mean, why wouldn't things get cheaper? We build economies of scale. We have robots that can build things for us. We can do more with less, right? So the natural state of the world is deflation, right? But somehow we've been taught that deflation is, the worst thing in the world. And why is that? Because in the current system, what causes deflation is when there's a credit event, right? Where essentially a whole lot of money that's owed between people, some of those people go bankrupt, and then there's contagion, like we had in 2008, where, this person can't pay this person, so therefore that person can't pay the next person, right? And that's what causes the deflation in that instance, right? But it kind of like goes back to like if you read, like mainstream economics, or, and you look at like their whole story going way back, they'll say that the gold standard is what caused the Great Depression, right? But they leave out the part where there was meant to be about a certain amount of gold backing each pound, dollar, pound, whatever, but they were cheating, right? And then it got out of hand. That was what the Roaring '20s was, and all of that kind of stuff, right? And then that's what caused the Great Depression. It was a credit event based on the fact that you had like extended credit to all and sundry, right? And then you blame it on the fact that you couldn't do that even more, right? And it's very similar when it comes to these conversations, because then people are like, well, then how would I buy a house? Like if I can't borrow the money or whatever, right? And so it requires like a more fundamental kind of change in the way people think, right? It's like, well, does it make sense to borrow £1 million and buy a house? Does that make sense, right? So it's again that whole situation of, if you look at it within the current system and then you talk about deflation, it's like, oh my God, it's the most terrible thing, right? But when you realize that the whole system is dysfunctional, right? And then you kind of step outside of that paradigm and you say, okay, wouldn't it be great if every year things just became cheaper and cheaper? So instead of having a cost of living crisis, right, we had the opposite, right? Which is just like, there was just more and more abundance and everybody just found life easier. And actually your spice could stop working because you didn't need 2 incomes anymore and whatever. Instead of all this money being siphoned out of society and pilfered away. And in that world, would I need to borrow £1 million for a house? Or could I say to the owner, I tell you what, you're moving into this new bigger house. Obviously I can't pay you, the money up front, but let's do a deal. You know what I mean? And I'll pay you off over time. And
the house probably wouldn't be £1 million either. Because, houses are being used as money right now.
This is it.
There's your house would go back to being a normal amount.
Yeah, I could probably pay the whole thing off in 3 or 4 years, which wouldn't be an issue. And we can find mechanisms and whatever for it, not in the current system. I don't think that any of this is insurmountable. And I also think that, I love, and I actually talk about it because obviously in our world, ESG is like, it's this huge thing, right? And so I have to address Bitcoin from an ESG angle. So I talk about the energy, environmental, and I flip the script. I do the same with the social aspects of it. So there I'm pilfering Alex Gladstein's work. With the environmental, it's kind of like I'm making up my own thing. But I'm kind of giving the facts. And then on the G, I've kind of summarized Jan Pritzker's book, Inventing Bitcoin. Right?
I'm as far as ESG goes, I get the environmental bit. The social bit, I'm not.
Yeah.
What is the social bit? And also, what's the I don't understand what the governance bit of ESG means.
Yeah.
Is that the way you govern people or what? I don't know.
Yeah. So start with the S. So the way I do it is I tell the story about a black woman who was working in an apartment block at the kind of reception and cleaning the communal areas in an apartment when I was working in Cape Town. And she was a Zimbabwean refugee, and she was earning like the equivalent of like 400 quid a month and sending like 100 quid of that back to Zimbabwe, where she had like 3 kids, 2 grandkids, and 2 brothers who were entirely reliant on that money, right? And having to send the money using Western Union, getting charged 20% for it, and then the rules in that country being that you have to take the money in Zimbabwe dollars while the inflation rate's 500%, right? And how I taught her about Bitcoin and how I had to get her smartphones for her and her family because she's a undocumented immigrant, which is why she's being exploited and only being paid 400 quid a month because she can't get a bank account, she can't get a SIM card, she can't get anything. And so we bought phones first, sent them back to the family, downloaded Bitcoin wallets on them, and then she would send the Bitcoin to them. And because Zimbabwe, the currency is so screwed, it's pretty easy to operate in Bitcoin in Zimbabwe. And there's also Bitrefill, there's, there's black market exchanges and whatever. So I use that as an example, but then I say, well, why am I telling you the story? And I show them what the world really looks like. How many people live in this situation? In terms of authoritarian, how many people live in authoritarian states? So look at the democracy index. How many wars are going on around the world and people are fleeing with nothing but the things on their back? We'll look at the corruption index, right? We look at inflation around the world, right? And I make the point that, when you think you're investing in emerging markets to kind of make a difference on the social or societal side of things, essentially whatever you do in that space is controlled by the ruling elites in those countries. So you think you're investing in these countries, making a difference, but really you're benefiting the top 1% in that country. And I make the point that there's no democracy industry or freedom industry or whatever, and that women in Afghanistan can't have a bank account without their husband's permission, or, central bank digital currency, or in Nigeria, or, all these things. And why having something that's controlled by no one, that no one can stop? I actually get people to download a Bitcoin wallet in the session and give them a little bit of Bitcoin and point out to them that, imagine being a refugee. Did you have to ask anybody for permission? Now you can go and spend that. Just show them Bitcoin maps. Say, look how many places you can spend that Bitcoin. This is real, it's not some fantasy. And imagine how useful that would be if you were stuck in that type of situation, And so if you really mean what you say about you want to invest in along these value-based lines, E, S, and G, tell me a better way, right? And then with governance, it's basically explaining how the protocol works, because what is governance in the corporate setting, right? Governance is the rules by which the company is managed to ensure that the board of directors is acting in the best interests of shareholders and the wider society and is being transparent and honest and everything's audited. That's governance, right? So what does that look like in the Bitcoin world? Well, transparent, open, public ledger, completely auditable. Nobody can control it. It's immutable. It's all of these kinds of things. But the question that always came up in those first couple of sessions was, but how do we know no one will make more Bitcoin? So I was like, okay, I can't give people the nutshell. For some of those people, I need to say to them, I can answer that question. I can give it to you in a nutshell. But if you can give me 45 minutes, I can explain it to you in depth. Right?
I thought you were going to say 45 sessions.
No. 45 minutes I can explain to you in a way that you'll be like, aha. Yeah, I agree. Nobody can.
I still have revelations to this day, mate. Thinking about it, and something new happens, and I have another penny drop moment with, I'm many years in still, but explaining it in 45 minutes. Yeah, that would be hard.
Yeah.
I mean, I really don't. I mean, even that question itself about the consensus and why wouldn't there be a change in consensus? Mm-hmm. There are so many second order effects that you have to think about when you think about how Bitcoin changes. What's the procedure to change Bitcoin? And most people don't know much about even that whole world of who suggests things, who gives them the go ahead, what happens when a change is, in want of a better word, authorized, and then who implements that change. It's everything's so
but also
alien to people, like, because you and I, even if the protocol did change, if you run a node at home,
you don't have to change.
You can do whatever you want. This is the thing.
That is the nub of
chaos. It's proper chaos. Yeah. The Bitcoin protocol is free and open and no barriers to entry other than a bit of technology.
Yeah.
And you have to get in. That's very nerve-wracking for a lot of people, myself included, when you actually think about it, especially if you have a significant amount of your net worth sitting on that blockchain.
Yeah.
And you realize no one's in charge.
Yeah. Yeah.
You've really got to embrace that chaos, because that's the world you're betting on.
Yeah.
It's freedom.
Yeah. Well, it's, you've got to be responsible. So now we basically commissioned a Bitcoin technology company. It's going to be coming soon. We've designed this very user-friendly technology to allow companies to pay Bitcoin employee benefits, right? And behind the scenes, without them even needing to know the terminology or anything, they're going to have their own Lightning node, right? They're just going to send a payment. The Bitcoin's going to be sent to their Lightning node, and the software is going to automatically distribute that Bitcoin to all of their staff, right?
When you say they'll have a Bitcoin node, it's just running on their computer? Or running an actual bit of hardware that's the node, you mean?
Yeah. Yeah, exactly. But they're not really going to need to understand any of this, right? All they're going to need to know is, I go to this website and I upload a CSV file with the wallet addresses and the amounts of Bitcoin per employee. That's it. And I need to send a payment for the aggregate amount that I want to buy to this account. The rest is just magically all the staff are going to get Bitcoin in their wallets. Right?
Can I ask a quick question about that? How does tax fall into that?
So it's just like normal salary, right? So what we're doing, for example, in the company, we haven't really settled on an amount, if it's going to be 20 quid or 50 quid or whatever. But we're going to say to everybody, listen, it's not coming out of your normal salary. This is like something on top, right? We're going to give you a little bit of Bitcoin every month. We want you to start getting used to it and get familiar with it and whatever. But let's say, and everybody's tax rate is going to be slightly different because we all earn different amounts, we're in different tax brackets or whatever. So we will say we're going to give you £50 gross, right? And then payroll will calculate what that is net, right? It's going to be a little bit different for each individual, right? Not to be discriminatory, but to be the opposite, which is everybody gets the same gross amount and then whatever the net amount. So that net amount is what goes in the CSV file, right?
And you pay the tax.
And they pay the net amount. The company's paying PAYE, right? And then if the staff say, actually, you know what, you only give me 50 quid, which ends up being 30 quid. I'd actually like 500 quid a month. Then that comes out of their net pay. So the tax is already taken care of. So if they were going to get paid $3,000 into their bank account, now we pay them 2.5 and we give them 500 in Bitcoin. The tax is already paid.
And what would the incentive be for a company to implement that then, according to you? I mean, how are you selling that to people? As a kind of way to get people into Bitcoin, or as a way to DCA into Bitcoin and hopefully in 10 years' time
Yeah.
I mean, they'll probably be sat on a nice chunk of...
I mean, the way I don't know exactly how I'm going to sell it to people yet. I'm going to figure that out as I go. But the one thing that is clear in my mind, at least, right, is when inflation was 13%, how many people got a 13% pay rise? Hardly anyone, right? So we all got poorer, right? So wouldn't it be great to have something in your life that's counteracting that effect, right? And wouldn't it be great if you're a company or an employer where the thing that you're giving yourself to counteract that doesn't cost you anything, like in terms of like, you don't have to give people like a salary increase every year now to keep up with that. I mean, you have to give them some kind of salary increase, but because of competitive pressures or whatever, you can't just raise salaries every year by 13%, right? But what you can do is give them something that, if it behaves the way we expect it to, and it should, it's going to compensate them for you, and it's not going to come out of your bank account.
You should put a 4-year time lock on it or something then as well, or a 5-year time lock, say.
Yeah.
Well, otherwise, I mean, are people going to have the option to convert it to pounds if they want?
So the issue is that when you're dealing with like individuals or whatever, right, you've got to be very careful that you don't stray into the area of financial advice, right? So it's kind of like we can explain to them what this thing is, and, you know, we're putting together like very simple training videos explaining to somebody. Like we want a 63-year-old technophobe to be able to kind of follow along and understand exactly what to do. Okay, you're going to go to your app store, you're going to download this wallet, you're going to write down these 12 words, you're going to hit receive, you're going to copy that address, you're going to send it to your HR department, and then you're going to start getting Bitcoin every month, right? And at a certain point, you know, you wouldn't work around with 10,000 pounds in your wallet, would you? So at a certain point, you're going to want to keep it somewhere slightly safer. So these are the options and whatever. And then we're thinking of doing a tie-up with BitKey, which we know has sort of security trade-offs and whatever, but it's kind of a midway between a hot wallet and a proper cold storage. And then we're also going to partner with various kind of Bitcoin advisory type firms for people who start getting into the category where they want to do multi-sig and whatever. But our kind of thesis is, and I know that because of the responsibility and the self-sovereignty and the scariness of it and all that, right, is we want to try and make it accessible with small amounts, accepting that and making it clear to people that if you don't look after it and if you don't do it properly, you're going to lose it, right? There's a risk here and you are responsible. There's no call center or anything like that. But once it starts getting to larger amounts and stuff, you need to start thinking about how you're going to do this properly and whatever. Because our thesis is, and I've seen this personally, is if you just start talking to somebody about Bitcoin, 9 out of 10 times they're not interested. So what we think is give them a little bit of Bitcoin every month and see how long it takes them to get interested, right? It's like once they got a bit of skin in the game, right, then we can kind of open the door. And like Sam's a very big believer in this idea of the intransigent minority, right? That, you know, like we're seeing the game theory pay out in the political space in the US. Yeah, I think it would be like shooting fish in a barrel if they wanted to kill it, because who would push back? There's like a handful of us, right? And so we need to get it into more people's hands, and we need them to have kind of self-interest in learning about it, which we feel like, you know, once the 50 pounds, then the next month it's 100, then at some point, and then the price quadruples and now it's 1,000 pounds. At what point does somebody go, what the hell is this thing? I've got to learn about it, you know?
And then there's a 90% drawdown and they're like, okay, I was wrong.
Yeah.
Well, it's going to happen.
Yeah.
I've watched this in real time in El Salvador. We've been a few times.
Yeah.
And it opened my eyes to a lot of the, problems that you come across at this stage in the cycle. Is that people want to receive Bitcoin, but everyone's using a wallet that allows them to convert it straight into dollars. Quite rightly so, because they're running a business. If it's a bull run, people tend to hold a little bit more Bitcoin, and then that's where you make Bitcoiners. But in the drawdowns, you do lose a lot of them back again. And it won't be until, we stabilize at some point when the asset size is very large. But at that point, there won't be these huge gains anyway. It'll be more the deflation thesis comes into account. So then, it is a double-edged sword. People do need to use it to get it. And I think it pays to have a reason to use it. It really does. And if it might be to make money. It's a fine reason for me.
Yeah.
Are we?
No, we're fine. We're fine.
good?
Yeah, I was just checking. Yeah.
I don't know because
it's blocked off in my diary.
We've probably been talking quite a long time.
We have.
So okay then. Well, let's see if we can sort of wrap it up a little. The view from I'm still interested in the view from the traditional financial world on Bitcoin. How do you see it progressing from here? Because in my world, we see Bitcoin as a freedom technology.
Yeah,
it is, and it empowers individuals and everything we know about it. In your world, I assume it's more like it's a good thing to put in your portfolio because it will slowly become a higher percentage of your portfolio. And at one point, you may realize then that there's something else to it. But really, you're dealing with people who are interested in maintaining their wealth, I suppose, and making a bit of money. Is that right? So what's the view in the future of your side of the spectrum?
I think it's going to be gradual. I think so like where we win is, if I go to a pension scheme that owns a car parts manufacturing kind of facility, and the membership is blue collar workers, and there's member nominated trustees in the trustee board, and I start talking to them about inflation, they totally get it, right? And those are the type of places where you can kind of get the message across, and it makes sense to them, and they're like, okay, let's do this, right? And then you've got the kind of professional trustee kind of, dyed in the cloth kind of, corporate minded, very aware of reputation and all of this kind of thing. And now you're just bringing him this thing that's going to make his life controversial and make him controversial. And he'd rather not know about it, And so I think what it's going to take is for, things that are already happening, like the state of Wisconsin investment board deciding to invest in Bitcoin, banks starting to invest in Bitcoin, because these are all kind of things that are important to those type of people. Like who else is doing it? I don't want to be first. I don't want to be controversial. I don't want anybody to be able to point a finger at me and say, he's that fool who invested in that cryptocurrency stuff, right? But if the Royal Bank of Canada have done it, and sovereign wealth funds have done it, and BlackRock says it's okay, and Fidelity says that it's okay, I'm still going to find with 9 out of 10 of them, they're still not ready.
Why is that, though? I mean, I think you've named institutions there that have actually bought Bitcoin. Yeah. And it's true. But aren't they the most well-known, I think asking a person on the street if they can name a large financial institution, and especially these days, BlackRock's probably rolls off most people's tongue straight away.
So it's quite interesting, right? Is that I'm not sure if people actually are following all of this.
You reckon?
And I think that there's been so much for so long of bad PR, right? It's going to take some time to kind of unwind all of that. You know
So
what I mean?
if I walked outside your front door now and stopped the first person going down your street and said, what do you know about Bitcoin?
Or tell me anything you know about the Bitcoin ETFs in the US.
Probably not that.
You know?
Yeah, that is, I think, that. Well, I mean, you know, I only know what an ETF is because of prior to me being interested in Bitcoin. I had no financial side at all. Yeah. I had no investment side. I put money in the bank. I saved like my mum and dad did. I never did investing. I never did anything like that. It was Bitcoin that opened my eyes to all of that stuff.
Yeah.
But Bitcoin itself, if I asked the person outside, I mean, I often see videos on YouTube of people with really stupid answers to that question, but I get the feeling they picked stupid people as well. They often do. You know, when you put a load of interviews together and everyone's saying, "Well, I never heard of it," or "Isn't it really expensive now?" or "Isn't it whatever?"
Yeah.
You know. But that's not everyone. That's just you putting a video together of people coming up with really unusual.
But I mean, like when I talk to people about it, I'm like, I tell them everything, and then I always say to them, and I want to make it very clear that I'm only talking about Bitcoin here. If it's called Bitcoin Cash or Bitcoin Satoshi Vision or Ethereum or Solana or Polkadot, that's not what I was talking about.
Yeah.
People always go, "Oh, I'm glad you said that. I never would have realized." Right? So the thing is that I think we're kind of almost like partly, not entirely, we're kind of caught in an echo chamber, like a bubble where we think everybody can see what we can see. And I'm not entirely convinced that that is the case from speaking to so many people and whatever. Also, another thing that people don't realize is, you know, you've got these boards of trustees of pension schemes and stuff. And like the trustees, like the IT manager or he's just another guy that you could have stopped on the street, right? That's why they hire investment professionals to help them, right? And so we're talking to those kind of people, and they're not like, and yeah, they've just been kind of, you know, maybe they've even asked an asset manager, "What do you think about Bitcoin?" And the guy's immediately shot back with, "It's a load of rubbish. It's worthless. Stay away." Da da da. Right? And then now I come along and I've got this whole kind of thing that I want to get across to them and whatever.
But your offering to people is very well risk analyzed, isn't it?
Yeah.
Like that's what's enticing. I mean, the financial world is a very conservative world for quite right. Well, I mean, you get a lot of crazy gambling going on and stuff, but investors, you and me, the people that want a pension and things like that, they're very conservative thinking. And I listened to what you said about how much you would allocate and think, yeah, that makes total sense. Why wouldn't you? Even as a risk, even as a hedge against me being wrong in this moment. I mean, you hedge in a portfolio for other reasons.
Yeah.
Why not hedge that Bitcoin against me being right about Bitcoin? Because I'm telling you now, I think this is going to happen. And a lot of people I know do as well, you know.
Well, that's something I actually share in that second presentation is I show them using long-term historic valuations of equities using this thing called the CAPE ratio. And I explained to them that equities are not cheap. You know, they're about the third most expensive that they've ever been in history, right?
You got a delivery.
I'll leave it.
All right.
They've got, it's the same with residential property. It's the same with most growth assets. And why is that? It's because people are using all of those things as money. They're just saying, take this and put it in something that's going to keep pace with the rate of inflation, right? And as a result, everything's overvalued. And then this perfect money comes along, right? And you, me, the next person realizes it, right?
Do you want to go and check that? It might be important.
Front door, the doctor's outside.
Really?
I obviously didn't close it properly. Yeah. So I basically explained to them that there's a risk that all of that value flows out of these things that can't just become more and more overvalued. I mean, once a house becomes too expensive for anybody to buy it, it's going to stop going up in value. And then people are going to be looking for places to store their wealth. And here's this perfect money. Start taking money from these things and put it in those things. Well, do you really want to have a portfolio made up of things where money's being taken from and put into something that isn't in your portfolio? So it makes sense to have exposure to this thing just in case that happens. In fact, I would consider it part of your fiduciary duty to at least consider that possibility and hedge against. So if you don't want to think about the opportunity, think about the risk, like you say, you know.
I saw something the other day that someone was talking about gold price action recently, saying that under normal circumstances,
yes,
gold would be on a rampage at the moment. It should be.
Yes.
And the reason it isn't is because people are deciding to allocate money into Bitcoin instead of gold during this inflationary time. Do you think that's true or not?
I don't know, because, I mean, obviously gold's done pretty well by gold standards lately. I mean, it's kind of gone from about 1950 to about 2,350. So what is that? It's about 12.5% return year to date, which the last time gold did that was quite a while ago. And also it's a much bigger asset, right? So a lot more money has to flow into it for it to affect the overall price of the asset. I would say that at the margins it's probably true. Like from what I've read, and I'm not an expert, like I said, I'm not really a gold bug. It's central banks and particularly the Chinese and the Russians and stuff like that buying gold. And I think that's what's moving the gold price. And I don't think they're making that decision. But I do think at the margins, probably there are, people saying, but also, is the type of investor who would invest in gold looking at Bitcoin and seeing it as that? I think they're thinking of it more as like a growth asset, because Bitcoin's in its monetization phase, they're expecting 50% return. They're not looking for a store of value. They're looking for something that can kind of boost the performance of their portfolio. So it doesn't necessarily make logical sense to me that, I was going to put it in gold because I wanted a store of value, but instead I'll do this. I think they're almost separate decisions. I don't know, but I might be wrong. I mean, personally, I wouldn't put anything in gold. Sam, on the other hand, he's kind of got a foot in both camps.
As a hedge or as a former gold bug?
Yeah, I think it's both of those things. I think he thinks that nothing's certain and that you should always kind of be humble enough to say, I can't tell what the future holds. And if this doesn't work, this will probably be the solution, right? And I also think that most gold bugs can't let go.
Yeah.
Yeah.
Especially if you own physical gold, because it's like a collectible, isn't it?
Yeah.
I used to have a bunch of silver coins, not gold. I never got into gold. But I did used to like silver coins because they had a certain rarity to them, some of them.
Yeah.
And I like that. I like the idea that I had a box full of, I haven't got them anymore.
Yeah.
I like the fact I had this box full of silver coins that I could get out as well and look at.
Yeah. Yeah.
That is hard to let go of.
And well, it's the tangibility of it. Yeah. It's something that I have to talk to people about because I'll get to the end of a presentation, right? Any questions? They're like, what is Bitcoin?
Where is it? I'm like, where is it?
I just spent an hour explaining what Bitcoin is.
Where is it, Bitcoin? Yeah. Start there. I mean, it is an absolute minefield in that sense. But then again, do we explain to our grandparents where credit card money is?
No.
I mean, it's not that dissimilar. It's on a ledger somewhere. It's on a digital ledger somewhere. It's just not a decentralized one. It's on Visa's ledger.
Yeah.
They're settling up once a month or whatever. It just settles up on the Bitcoin network, settles up more frequently and directly with you, not through a second part. But yeah. So you're bullish on people adopting Bitcoin then?
Yeah, I think either it's going to happen gradually, one at a time, and the people who like sort of staying with the herd are going to wait until it's kind of safe, and that's what's going to kind of slow it down. You're going to need some sort of early adopters in the institutional space in each country to kind of lead the way and kind of almost give permission to people that it's okay. We're not going to hold it against you that you did something innovative and new. Unless something big happens, some event, I don't know,
US
sovereign debt crisis, currency crisis.
You mean a flight to safety event, not someone like the US government saying, we've got a sovereign wealth fund of Bitcoin now.
Where it becomes obvious to everyone that the system has got a major problem. Like where all the things that are already obvious to us become obvious to everyone.
What is your opinion on that? How dangerous are the times we live in now? Realistically, not. I've heard what you said, and I agree that the system is. I mean, it's pretty effed up, isn't it? But how long can it carry on, according to you?
So what's interesting, right, is that if all the debt, right, because that's the heart of the matter here, okay, and it's not only the explicit debt, right? So the way I explain this so that everybody can understand it, right, is that if a company has a defined benefit pension scheme, the company is on the hook to pay those people's pensions. So if there's not enough money in the pension, the company has to put money in, right? And the government wants to make sure that all these pension schemes, companies have got enough money in them, because otherwise people are not going to have a pension. And so they have all these ways of measuring whether they have enough money, which is part of my job, right? And if they don't have enough money, the regulator forces the company to put more money in. But here's the interesting thing. The government has its own defined benefit pension plans, and they have no money set aside for them.
But can't they just sell bonds to get that money if they needed to?
So this is where I'm going, right? So basically what they do is through a combination of current tax revenue, right, and issuing new debt to pay an existing debt.
Yeah, which is the whole Ponzi scheme.
And so the thing is, right, that if you look at so for example, the explicit debt that the UK government has through gilts, through the bonds, is about 2.1 trillion, right? But if you calculate the present value of the defined benefit pension schemes, the state pension, which are all things that they owe to people, right? It's about another 6 trillion. Okay, so 8.1 trillion. Okay, and if you do the same thing in the US, it's about 34.5 trillion in explicit debt. But just Social Security is about 115 trillion, right? And then if you add Medicare and Medicaid, I think it's above, forgive me, I'm sort of making numbers up here, but they have this order of magnitude, somewhere in the $200 trillion range, right? And this is money that, as well as paying the interest on the 34 trillion, they have to pay out Medicare, Medicaid, Social Security. These are real payments, right? And then you've got like a economy that essentially, even if you taxed all of the income and everything, and you start kind of figuring out the maths, you realize there's no way you can do this, right? Unless, well, if you had a fixed money supply, if you had a hard money, you would be at this point now bankrupt, right? But what you can do is you can just issue debt and create more money and da-da-da. So what are you going to do if the money that you owe is in a currency that you can print? You're going to default on the debt, but not in a real sense. You're going to pay every pound that you owed, but you're going to pay it back in money that buys a lot less. It's been debased and whatever. So how long can that go on for? Well, if you look at what happened in Rome, right, is the soldiers stopped accepting the money. They said, this money is worthless. We're not accepting it. We're leaving. And that was the end of the Roman Empire.
Is that right?
Yeah.
Is that what happened?
Kind of. I mean, it's a very sort of
summarized. Because the money was inflating?
Yeah, so I think it was, Caesar, I think during Caesar was the first one who made, I think there was 8 grams of gold in a denarius, right? And then there was Augustus, and then I think it was Nero who started coin clipping, where he'd basically collect the money in and then remint it with less gold in. And they slowly debased it until there was like 0.1 grams in a denarius when it was 80 times more in the beginning or whatever. And eventually, that the money had become could buy so little and whatever that the army said, we're not interested, right? So I think, that is the end game, right? Is that you eventually debase the currency to the point where it's like the Venezuelan bolivar or whatever. Nobody wants to use it. They're just looking for anything else to use as money, right? Because they know that, if I, like in Venezuela, or actually I was in Argentina recently, and they don't have price tags on anything in the shops. And I was like, I was saying, I said because I was looking for T-shirts and things, and I was like, why did none of the shops have price tags on them? I was like, we'd have to change them too often. So at that point, it's become dysfunctional. We're not near at that point yet, and it may take a very long time, and they can kind of also play this game where, but we're all gradually getting poorer. There's a reason why in the 50s, my grandfather worked, and my grandmother didn't want to work, not because my grandfather was sexist or, a misogynist or something, but just because they didn't need 2 people to work, and she wanted to make a home and look after the kids. Just naturally, it was her choice. Nowadays, my wife and I are both professionals. We work our butts off, and we're still not, we've got to be careful with our money and stuff. So, I mean, that's the reality of all of this, and it's just gonna take a long time, right?
It's going to get worse.
I think so.
Well, also, I mean, there's a life cycle to fiat currencies. We know that.
Yeah.
They're kind of programmed to do this.
Yeah.
And sterling's been around. I mean, we're in the UK here. Sterling's I think it's the oldest remaining one, isn't it?
Yeah. I mean, so I want to tell you, let me see here. Okay, I've got 10 minutes. So I want to, do you remember the story from Seyfeddine's book about the Bank of England?
Which one?
This is my favorite story, right?
Go on.
So in 1913, okay, and it goes back to kings and monarchs, the monarchies in various countries in Europe and whatever. When Archduke Franz Ferdinand was assassinated in Serbia and a war broke out between Austria and Serbia, right? There was no need for other countries to get involved in there, but except that they saw geopolitical opportunity, right? To kind of almost like, in that game board Risk, kind of reposition their pieces on the board and get one over on their rivals and stuff like that. But of course, when they do that, they need to get the public behind them. So then they have to kind of get the messaging right, that the people think that it's justified that we go like 3,000 miles away to fight a war that's got absolutely nothing to do with us, right? And it's even more challenging if you're on a gold standard, which we were at that point, a classical gold standard, right? Because you can't just print gold out of thin air, right? But so Isaac Newton was the lord of the mint, and basically he set the ratio between gold and each pound, right? And it was law. You couldn't, the Bank of England had to have a certain amount of gold, and you could go to the Bank of England, give them the pounds, and they would give you the gold, right? So they wanted to go and have this war. So they decided we're going to issue war bonds, gilts, but we're going to offer a higher rate of interest than on the normal bonds to kind of incentivize people, right? And they needed to raise, it doesn't sound like a lot of money today, but back then it was huge amounts of money. It was 300 million pounds. So they issued this 300 million pounds worth of bonds, or they offered them to the public, and only 100 million was taken up, right? So secretly behind the scenes, and this is all now on the Bank of England's website, you can go and read it yourself, so in case anybody thinks it's a conspiracy theory. And what they did was secretly, they issued lines of credit, right? So just pure debt with no gold backing the money or anything like that, to two very senior officials in the Bank of England in secret. And then those officials bought the remaining war bonds, but they didn't tell the public that they did this, right? And then they released to the press, war bond subscription way oversubscribed. This is proof that the British people understand the need to enter the war, right? And then they did it 4 more times during the First World War, right? To keep the war machine going. Right? And the First World War led to the Second World War. And in between, we had a Great Depression and all this kind of stuff, right? And so, yeah, there's a lot of stuff that people don't know, and people don't realize that until 1971, we were on some kind of bastardized, kind of quasi-gold standard at least. And now we're just dealing with pieces of paper, pretty pieces of paper, and...
Well, like you say, anyway, we were on a gold standard when they issued $200 million worth of fake credit to their own people.
Quantitative easing and manipulated public perception and, and got us into a world war.
And I mean, I don't know whether you tell your investors this, but the process of taking monetary policy out of the hands of human beings, which is what Bitcoin does.
Yeah,
basically, is a super important part of it for those exact reasons you've just pointed out there.
Yeah,
and it is too much for people to. It's too much responsibility for people to take on. Yeah. They always, in the end, they always like print the money.
Yeah, it's sort of like those things where I can't even remember the name of the experiment, but where they put a 6-year-old in a room with a marshmallow, and they say to him, if you don't take the marshmallow, I'm going to come back in 10 minutes and I'll give you another one and you can have 2 marshmallows. And 9 out of 10 of the kids can't handle it and they eat the marshmallow before the guy comes back, right? It's like, it's human nature. Right? Do not design a system that is corruptible, because it will be corrupted. Design something that, doesn't require the good or, can't be
It needs a virtuous person. There's no such thing as a purely virtuous person.
No.
Because even the most virtuous people, if someone's holding a gun to your daughter's head,
yes,
you're not virtuous anymore, are you? You think about yourself. You think about your daughter. You don't think about everyone in the world or everyone, and that's very normal and that's okay.
Yeah.
It doesn't diminish the human condition in any shape or form. I just think of all things, money, which if you study it, like a lot of people have, you realize it's the most fundamental network in existence.
Yeah.
And it's really quite a surprised to even think about what is money. But when you do, you realize, it's too much for someone to be in charge of. Well, Glenn, I don't know whether that's a good place to leave it. I think you've got a meeting coming up.
Yeah, thank you, Tim.
That was a great talk. Really enjoy
definitely.
it.
Yeah, me too.
I like having a natter about Bitcoin every now and then.
Yeah, man.
I hope it's of interest to our people. I know we have a lot of Bitcoiners.
Yeah. And one thing that maybe you can, if you want to include, because I know it's a Free Cities podcast and we didn't get to that point, is that I think this idea of creating circular economies and getting people to get paid in Bitcoin and whatever, and we've kind of got this technology and we'd like to be able to franchise it around the world. I know there are other solutions, but if anybody's interested in kind of figuring it out, with us, maybe we can kind of do some interesting things together, because the main aim here is to spread Bitcoin. Obviously, we're a company and there's got to be kind of some kind of commercial arrangement, but that's not the main drive here. It's more like if people are like, oh, in my place, I'd love to be able to pay all my staff or these people or whatever in Bitcoin. I just, don't want to have to kind of think through all the headache and whatever. I just want somebody to come and plug and play it or whatever. Get a hold of us and let's have a conversation and see if we can kind of, orange pill free cities or regions or whatever. Yeah.
It's a very, it's a like I say, it's a big part of the Free Cities movement is our Bitcoiners.
Yes.
Because it's a self-sovereignty freedom aspect. And ironically, there is also a lot of crypto VC people as well. It's and I think what is attractive about that side of the industry is the fact that if you're starting a community, you can use a token to, get some funding for starters if you really want. If you've got community members and they like what you're doing, which is not something I'm into, but we have communities that wanted to create a stable coin, for example, because they wanted to use a stable coin rather than, like in some countries where in Montenegro, they use the euro there. It's very
But how did they marry that in their minds with the idea of self-sovereignty? Because it's like, if I accept now that coin that guy's issued to create his community or whatever, I'm beholden unto him. And if I have a stable coin, I'm beholden to whatever currency that thing's pegged to. So it's like I have the right intention, which is I want to be kind of self-sovereign and I want to kind of break out of the system and whatever. But then the tool that I'm choosing to do it doesn't actually break that link.
I think what it is, and I've asked this question a lot, the most common answer is that this is the technology we have at the moment. We can't use Bitcoin on a day-to-day basis because of the volatility. Yeah. Look at, say, Strike, the wallet. Most of the wallets that use stable coins, all the stable coins are on other blockchains.
Yeah.
So it is being used. Other blockchains are being used because they have to be used. And I don't belittle that at all. I think using a stable coin instead of the US dollar when it's interchangeable with Bitcoin in a wallet is the way to go. I've seen it in real life. I've not seen a better solution. Yeah. But long term, I think obviously you want to base your civilization on pure sound money. Yeah. But this whole thing is an experiment, and people will use the technology that's most useful to them. Yeah. Stablecoin technology is useful.
Yeah. People are not into ideologies or philosophy or theories. They, like you say, it's got to be practical. It's like, and I do think Bitcoin has a role to play in that as a long-term store of value, but it's not going to be used as medium of exchange by businesses or individuals, unless you're like a die-hard Bitcoiner, and
but arguably long term it will. But then again, there are a lot of questions with that I have about using the use of the base chain, which is going to be unaffordable for the majority of people within probably 10 or 15 years. I don't know. Okay, now we're talking, okay, Lightning. Okay, cool. Second layer, liquid, whatever. But are they as self-sovereign? No, they're not.
And also when you start talking about LSPs and stuff, you introduce things that the powers that be can attack.
Right.
And so then you get into the downsides of decentralization because you can't come together to find a solution. And so,
But then again, that's the point. You either if you make your bed, you lay in it. If you make the decentralized bed, you lay in it. And I'm happy to lay in it. It is a chaotic place.
Yeah.
But they're my people. Yeah. And I know that when I meet them.
Yeah.
You accept to go along with the chaos, which is everyone chipping in and everyone, the option to change being a consensus thing. But yeah, it's a beautiful work in progress, and I love what's going on. And good luck to you with all your products and whatever it is you're doing there.
Tom.
You've got an interesting job, I must say.
Yeah. It's always a pleasure speaking to another Bitcoiner. It's like we got a connection that you can't have with anybody else. It's like, I know that if you get Bitcoin, I can probably trust you.
Hopefully.
Yeah.
Right. Great talking to you anyway.
Thanks a lot, man.
Cheers.
Bye.
Bye.